We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto. This is your week daily morning show where we go live 10 a.m. Eastern every single weekday to bring you the latest Bitcoin, cryptocurrency, technical, on-chain, especially for today, and fundamental analysis. Today, we are going to be joined by a very special guest who I will introduce in a second, and we're also going to be talking about how Jay-Z and Jack Dorsey are actually going to be teaming up to teach Bitcoin to people in New York City. We have quite a lot to talk about today, and we are very excited to talk about it. These are some very big updates going on in the cryptocurrency space, and the reason inflation is in the title is because we just got confirmation that inflation ticked up to 8.6% year over year from 8.3%. We're going to be discussing all of that and more in today's episode of Coffee and Crypto Live. But today I have a very special guest because we are joined by not the fake, but at the real Plan C. How are you doing, Plan C?
Thanks for having me on your show. Yeah, it's a great opportunity to chat with you and share some stuff that to do with on-chain or whatever you want to talk about. So thanks for having me.
Absolutely. Well, I'm glad you could come on. You've got a really awesome journey over the last couple of years. You can see here on my screen that you joined Twitter September 20th, September of 2020. You've already got 140,000 followers through all of your posting about on-chain activity. What is some of you? What has drawn you so much to on-chain, and what's that journey look like for you?
Yeah, I mean, so I really only started the last 6 months or so. Focused. Well, I was focused on-chain prior to that for about the last year and a half, but I really only started posting about it the last 6 months. And so, yeah, I mean, it's just something for me. I like math. I like analyzing. I like trying to be not emotional. So, like obviously with investing, in general, big part of the challenge is to not be emotional and to make decisions based on as much data as possible. And so with the on-chain, I mean, it's one tool. It's not everything. Obviously, there's lots of other aspects. Macro, TA, order flow, derivatives, liquidity. Like there's many aspects to analyzing the market. But with on-chain, it was just something that I gravitated to. Glassnode provides a lot of really good data, and so I ended up getting their top subscription and just kind of spent the last year and a half digging in. A big part of it was I got in 2017 to crypto. I actually got in basically January of 2018. And so, I made the mistake like a lot of people, getting in at the top or I didn't buy Bitcoin at the top, but I bought altcoins in January, which was not a good thing. And so I actually just wrote it out the whole bear market and I spent the whole bear market learning. I didn't sell anything. I was actually extremely heavy in one specific altcoin, but I just held through the whole bear market. I paid my dues. I focused on just learning, listening to podcasts and everything like that. But then, coming around this time, I ended up buying also a bunch during COVID. I finally realized okay, I need to be more in Bitcoin and, less alts. And then obviously when the COVID crash happened, I was like, this is an opportunity. So I went pretty heavy in during the COVID crash. But essentially, I was like, this time, this market cycle, I'm gonna try to pick up some more tools and understand more things to kind of get a sense of where we are in the market. And so that's my focus. It's more high time frame. I don't do any day trading or anything like that myself. And you should never do that. With on-chain data, you don't want to be doing day trading or anything like. It's not what it's meant for. It's high time frame. It's more the health of the network. Extremely oversold, extremely overbought periods of time on kind of the higher time frame. So that's why I use it, and that's what I'm trying. What I try to do is aggregate as much of the on-chain as possible, factoring in other things as well, and then trying to figure out, okay, is this a good entry to DCA in or DCA out, basically. But yeah.
Good deal. Well, Plan C, you are definitely one of the most anticipated guests that we've had on the channel. People have been really looking forward to seeing you on our channel. We've had a lot of people say, you need to bring on Plan C. You need to bring on Plan C. And we're like, yes, okay, we will do that. We want to bring him on so we can learn more about on-chain analysis. We're going to jump into all of that here in a little bit. But first, I also have to introduce my other co-host, T-Shroom. How are you doing, T-Shroom?
Better than I deserve, Jebb. That's how I'm doing.
Well, there you go. I like that hat. It's a nice hat.
Appreciate that compliment.
I'm colorblind. Is it orange or green?
Well, I'm not going to tell you.
Wow, that's just bigoted. That's not very nice of you.
Yeah, well,
Okay.
That's where I stand on that.
Well, I see how it is. Okay, well, we're also joined by Smay, and I'm pretty sure that's a black hat, but it could be like a dark purple.
It's gray. It's gray. So, anyways, guys, I'd like to say I would like to, just as I was introduced, I'd like to introduce some fantastic people, and those are people with green names. So we have Elliot Locke, Colin McDonald, Mitch Shaw, Why You Loud, Sultan of Salt, Colin McDonald again, Tristan Williams, Philly Fan 61, or as Tim would have said, Philippians 61,
From the Church of Philippi.
Siobhan Goulet, Win Peoples, and then shout out to Kelly Kellum, Matt C. You guys are in Austin with Tim at Consensus. That's awesome. Shout out to you guys. And so I just wanted to shout out some green names. I love all of you guys. You're the best. Back to you, Jebb.
Well, Plan C, you and I are going to have to stick together on this stream because you and I are the only ones not wearing hats. So let me ask you some questions about what you see in the on-chain analysis right now. Would you kind of, let me just use an analogy. I like to use analogies. Would you say that the on-chain data that we're able to observe in the cryptocurrency space is almost like taking the vitals, the heart rate, the blood oxygen level, the vitals of Bitcoin and cryptocurrencies?
It's a good way to say it. Yeah, honestly, it is. So because obviously on the exchanges, like on-chain by definition is off the exchanges, right? So it encompasses a high percentage of the overall coins. Essentially like roughly about 85% of the coins are off the exchanges, or actually 87 off the exchanges. But obviously, the coins that are on the exchange is where the price is being determined for the most part. I mean, on shorter time frames, right? That's where order flow, liquidations and things like that is really moving like the intraday movements of the price. But as far as supply dynamics and more long-term, growth and health of the network, really, I mean, like hash rate, we've seen hash rate continue to put in all-time highs, right? There's just so many, that's connected to difficulty as well, which is like the security of the network. That's basically at an all-time high. Just the amount of users joining the network. So like all the health of the network and all those metrics to do with that, they're showing exponential growth. They're showing network effects. And I think not everyone understands that. Like they look at all these cryptos and they think, oh, they're all the same. Bitcoin's already too high. They don't understand UDIP bias. They get confused and they don't understand like Bitcoin. I mean, it has an actual realized cap, meaning, the value when all the coins last moved, is sitting basically around 400. I think it's about $450 billion. Now, there's so many other. I can't remember. It's off the top of my head. It's like 450 or $500 billion is the realized cap. So that is very different than market cap. Market cap is what's on the exchange. Like that's basically the speculative value of the asset. That's determined by the price on exchanges. That fluctuates up and down. We have exuberance. We have obviously a lot of bullish behavior, and that the price can go really high. But as far as the realized, that's actually the value that's come into the network. And when the coins move, that's actually money that's come into the system. So there's so many other cryptos, and this is a huge, very important point. There's so many other cryptocurrencies that have a high market cap on paper, but in the reality is some of those coins, there's not enough liquidity and there's not enough buyers at those prices to actually get that value out. A very perfect example of that would be Hex. Hex has an absurd market cap. That's why CoinMarketCap doesn't even put it in the top 100. It's on the second page, it's 200, is because market cap's fabricated. Richard Hart holds 85% of the supply. There's no way you have, I can't remember, it's like $100 billion or like 20 or $30 billion of value that's going to come in and buy out those people that are in. On paper, they have that, but if they try to take it out of that network, they don't. Right. So liquidity is important. Bitcoin has that. So again, it's just I agree with you. It's the health of the network. It's on-chain really gives you that kind of big overview of the health.
So that realized cap metric that you just talked about sounds extremely important to me, because something that I've been talking about for a very long time is the intrinsic value of the network. Now that might be, as far as price is concerned, at one point it may have been $3,000, $5,000, $10,000, $20,000, $30,000 for Bitcoin. As far as market capitalization, could have been 20 billion, 50 billion, 100 billion, 200 billion, half a trillion. Would you say that as far as the intrinsic value of Bitcoin, what it's really actually what it properly should be worth, does that almost kind of sound like what you're talking about with realized market cap? Because you're right, the true value of a currency hides behind its market capitalization. Maybe this metric of realized market capitalization would give us a lot more insight into what the value of what the currency should actually be worth, quote unquote.
Yeah, I mean, it's like you'd call it the fair value. You could say that. You could say that, but like, just because we're going through a growth curve with Bitcoin and crypto in general, it's going to trade above its fair value most of the time. Just the nature of it. People are anticipating the halving. People are anticipating the growth of the network. But at times, very rarely we do go below it, and usually that's pretty much a bottom signal,
right?
It's a bottom signal, and it's usually a time when you want to DCA in. So off the top of my head, I think the realized price right now is sitting around 23 or 24,000. So we're pretty close to that. We've gone below that. Yeah, I know.
We've been calling 23 for a month and a half.
Well, it's interesting. Well, when you see my charts, you'll see I'm on the same page as you. But basically, with realized price, I mean, it's we've gone below it in previous bottoms, so like the very bottom of the bear markets, barely. But the thing about realized price is that as the market cap gets larger, there's less volatility. In my opinion, over time, more adoption, more big buyers will step in at lower levels. I don't anticipate us going as low as far below the realized prices we have in previous cycles. And we might not even get below it. We might just touch it. We might go barely below it, but it's a good gauge. It is, because that's really the cost basis of the entire network. All the coins, realized price represents the cost basis. So it does give you a sense of kind of like the fair value, but like I said, we usually go above that, or usually we're above that because of exuberance,
because of growth of an emergent asset class like Bitcoin. Do you have a chart where we can actually see that realized price over time? Because that's definitely something I'd like to see. Because you can do analysis.
I don't have it I don't have it on me personally. Like I don't have it right now up, but I do, like one of my some of the charts I have towards the end of my couple slides. Like it's realized price is factored into some of my models. Like it is in there. So there's other metrics that are calculated as well, but it is kind of in there a little bit as well. So
right.
But no, sorry, I don't have it up right now.
Well, that's all right. I understand what you're saying on that. Well, that actually leads me into another question that I had for you. We've talked about during bear markets, essentially what we're doing is we're eroding away the topsoil of follow me on this weird analogy.
I like analogies. I'm all over the analogies. I use analogies too. I like them actually.
I love using analogies. People are like, Jebb, you have the weirdest analogies. I'm like, I know, it's just crazy the place my brain goes. Anyway, so I think of the market like this. When you're building a city, when you're building a skyscraper, you can either build the foundation on the topsoil, or you can drill all the way down to the bedrock and drill a little bit into the bedrock to root yourself. And I think what we see in cryptocurrency is that as the waves come and as floods come and as the rains come, which is the bearishness and the FUD, it wipes away all the topsoil, and then we get down to just the bedrock. Those are the hodlers that are not going anywhere. It doesn't matter how far the price goes down. They're going to buy it up, and it's going to just absolutely anchor the price. That, in my opinion, has a lot to do with what you were just talking about with the realized price, and also with the supply of Bitcoin. Because, of course, we know supply and demand dictate price. Demand is something that's going to come in from mostly fundamentals. It's going to come in from, yeah, sure, TA, but hype. But as far as the supply side is concerned, how do you see the supply of Bitcoin being set up during this bear market period, ready for the bull market? Do you see things like realized price and the hodler ratios setting up this concept of a bedrock foundation for Bitcoin that we can then build from moving into the next bull market?
100%. And I would say with every cycle, that foundation gets stronger.
Right.
And there's a reason for that. You can actually quantify that with the on-chain data. So like essentially what we see throughout the cycles is we see there's long-term holders and there's short-term holders, right? So that's defined by Glassnode's heuristics, and basically long-term holders is people that have held over 155 days. That was just the statistical cutoff they found was significant. Less than 155 days is called short-term holders. So basically, all the coins are broken down into three major categories. You have the coins on exchange, which is about 13% of the coins. You have, I think it's around 70, off the top of my head, it's like 73 or something are with long-term holders, and then the rest are short-term holders, right? So the majority right now are with those long-term holders, but that's not always the case. Like what happens when we have the hype cycle, at the beginning of last year and everything, is we actually saw the short-term holder supply shoot up. And the reason for that is because long-term holders were taking profits as like they sell into strength. So when the price hits an all-time high, continues going, they're smart money by definition, long-term holders, just because they've been in the space longer, they've had more time to learn. And they just by experience, by riding the ups and downs of volatility, they just get more educated and make better decisions. So they obviously don't always make the best decisions. You do see long-term holders capitulate a little bit, even at the bottoms of the bear market. They lose conviction, and that's actually a signal as well that it's close to a bottom. But during the hype cycles, you do have the long-term holder supply increase because those long-term holders are selling. They've hit their targets. Maybe they've held for 5 years or 3 years, and they've decided I'm going to take some profits off the table. They don't usually sell everything, but they sell some, and so we see those fluctuations, that ebb and flow between the short and the long-term holders. But right now, we are on a higher amount of coins with those long-term holders. Like I said, around 73%. And then if you look at the 1+ year holders, those are the coins that haven't moved in at least 1 year. We're at an all-time high, right? And so that is around 66% of all the coins haven't moved in at least 1 year.
Wow.
And exactly. And like that's that bedrock you're talking about, right?
Yeah.
Because those people, like especially a year, like the long-term holders 155 days, but I really like the year because I can actually track and see how much they're selling on a daily basis, and it's very low amounts of coins. Those 1+ year doesn't sound like a long time, but after a year, you've really experienced the market volatility, and most people at that point are pretty convinced about Bitcoin long term.
Mm-hmm.
And so 1+ year, we're at a high, all-time high, like I mentioned there, and so, a large percentage of the supply are with those parties, right? Those entities. And so because of that, their cost basis is also lower, right? The long-term holders, like I said, 73% or so, but their cost base is around 22,000, whereas short-term holders, their cost base is around 36,000. And so, and also 90% of the coins that are in profit right now that are sitting in profit are with long-term holders. Mm-hmm. And so not only do they have the experience on their side, they have a lower cost basis, and some of them have a very low cost base. Like 22,000 is the aggregate of all of them, but there's some of them that are sitting on like cost basis of 1,000 or less, or whatever, 5,000, like really low, right? So what we've seen over the last year and a half, with this kind of double top, or whatever you want to call it, is a lot of people got shook out of the market. Like a ton of short and long-term holders that didn't have conviction or whatever, they sold. So that's one of the reasons why I think macro is the biggest thing for me right now, and the biggest actual research I'm doing is on the macro, is because the on-chain story is pretty simple. Like we're showing very similar patterns to previous cycles, and there's tons of metrics I can quickly go through that show that we're basically at the same oversold macro levels on the higher timeframes that we have been with all the previous cycles. But the biggest X factor is macro going to drag us below and actually cause us to go like further out of the mean reversion that we normally would? So that's my biggest question right now is macro really going to pull these metrics down further than they typically have gone in the past? Because on-chain wise, it's looking like we're approximating like a bottom area.
That's what I was going to say.
Sure.
So let's dive into that question then, because we got 8 minutes here, and then we're going to have to go into our next segment here. So let me just ask you, what is your outlook on the market for the next 6-12 months? Do you think we're bottoming? I heard 23, 24 earlier based on relative price. What do you think the next, let's say, year looks like on Bitcoin based on the on-chain and everything that you were looking at? And you can even, if you've been following it, then you can tell us a little bit about the inflation stories. What are you seeing happen in the next year based on the analysis that you're doing?
It's honestly so tough. I'm not trying to cop out. Like I usually give my bold opinions on things, and I'll say stuff, but it's really comes down to macro. I think like on chain, like I said, like it tells you where you are relative to the entire history of Bitcoin. Like I can quickly show you that and see,
go
like,
for it. Show us some charts if you want to.
Yeah, I'll show you that. But like, as far as like knowing where the price is going to go and everything like that, it just depends on macro. That is just kind of the way I'm seeing it. But I'll pull up these charts quickly, and then I'll give you an idea. You can get a sense of what I'm talking about here.
I love it.
So basically I'll go full screen here. So different metrics I'll quickly go through. So this is the total supply held by short-term holders. Total supply and profit held by short-term holders, and 90-day exponential. So you can see like all these different periods here, right? This green zone is kind of the oversold, and we're basically we're getting close. Like we're starting to kind of hone in on the same range we've been in all these previous bottoms, and what happens is you get so few short-term holders that are in profit that like the ones that are left, they've just like decided not to sell. There are some short-term holders that'll just hold even though they're underwater, and that's basically the only ones remain once you get down to these levels. And so
that's the bedrock.
Like I said, this is the bedrock exactly of the short-term holders, right? So that's essentially what that is. And then this next one here. So this is I use a Z-score, which is just for statistics, but basically it's percent of transferred volume and profit. And so I use higher moving averages for this, higher time frame. But you can see here, right? Like we're at the same level. It's not a ton of data points. It's just the reality of the cycles. We don't have like a ton of data, but you can see we're sitting at the top of this blue zone. We did go down into here during the last bear market bottom in 2018, but in 2015 we kind of touched the top, so we could see it. The top could be like the top meaning the bottom on this metric. You never want to use one, you want to use confluence, but on this metric it's showing we're getting close to a bottom. If not, we're already there. And so there is more room to the downside potentially, but not necessarily. And so that's just another one, and it's all about confluence, like I said. So I just go through these all quickly. This is dormancy flow. So this one is really to do with the HODL behavior. So basically, when this is really low, when this metric is bottomed out, it's indicating there's really not a lot of holders that are selling, like longer term. It's not based on long-term holders. It's actually based on the age of the coins. So they factor in the age of every coin, and it's through CoinDays rate, all this stuff. But in essence, you can see where we're at. This is on a 30-day exponential moving average. We're actually at we'd actually just put an all-time record for being oversold.
Wow.
So we've never actually been this low. I mean, it's very close to what we were in 2011. So we just eclipsed the 2011 record, and on a 30-day, on a 14-day, we're kind of around the same. Like we're a little higher, but we're essentially on the higher time frames, which I like to use. Give us the big picture here. We're as oversold as we've ever been on that specific metric. So again, showing we're getting close to a bottom, or we're already there. Next one, this is to do with the supply. Like I said, the supply last active 1+ year. I really like this metric for essentially because they're the strongest holders, in my opinion, those 1+ year guys. Mm-hmm. And this is the rate of change. So it's actually the momentum of how much supply they hold. And then as they release supply, it causes the reverse. But you can see every time we've kind of gone into and left this green zone, which we just recently did, every single time. I mean, it's only 3 data points, but again, it's multiple charts with 3 data points, so it all adds up, right? But you can see here, we left this green zone right there recently, and every single time we've done that in the past, here, and here, the bottom was already in for that cycle. Doesn't mean it'll be this time, but it's just interesting. Macro could change it, but if history repeats for a 4th time in a row, we've already had our bottom, or I would say we're getting reasonably close to the bottom. This is my floor model. So this is very, very close to your guys's floor as well. But this one, I basically combined 3 different floor models with the on-chain data. I call it Confluence floor model because I actually combined the 3 models into one. And on this one, we basically hit this line at the very bottom of the previous 2 bear markets, and then during COVID. Those are the only 3 times we ever touched this line. And that line, like I said, right now is at 24.4. So and this is a daily close model. So we can definitely have like intraday wicks below that. But as far as the daily closes, it's at the 24.4 right now.
Wow.
And it's not moving up and down much. Like over the last 90 days, it's dropped 1%. So it's very flattened out. So I don't expect this line really to downtrend much. And so, yeah, I think this model is showing on a daily close probably between where we're at now and like 2024 is what this model is anyways. And then just on a closer, quickly going closer here, you can see the gap, right? So our lowest daily close, I'm not sure if you know, but I can't remember off the top of my head, but it's like maybe 28 or something like that.
28, yeah.
27, 28, yeah, something like that, right? So you can see like, these usually are short-lived when you go down to this line, right?
Yeah.
Like on all the previous times, these were like really fast moves and then bounces, right? So because of mean reversion, you get there and then you come back generally fast. It doesn't mean it'll happen again. But if we do drop down to that level in daily close, I'd expect it to be quick. This is my last model here. So this is actually, I call it the Bitcoin entry risk map. So what I did is I use a mean reversion model, and then also I adjust for volatility. So meaning diminishing returns and then diminishing losses through each cycle. we're just seeing less volatility in both directions. That's just a trend. I mean, that could change. You can see it pinch in, right? You see how it's wide at the beginning, and you see over time how it's pinching in on both sides. And that's why I adjust for it. So that's the biggest difference. A lot of these on-chain models and metrics, like people aren't adjusting for that diminishing in both directions, and I do that for a lot of my metrics. I mean, it's just I feel there's a higher probability that plays out than it doesn't, and it gives you a little bit more ability to catch bottoms. But with this model, I mean, we've only ever got down to that 1, which is like the lowest risk. So I have it mapped out between 1 and 100, and basically, the idea is dollar cost averaging in between 1 and 20 on the risk. And then, you got the middle zone where you're more hodling, and then at the top, you're laddering out. And so that's on the high time frame. I'll just zoom in and show you on the lower time frame. So on this is about the last 5 years. And so right now, the risk 1 is 21, 250. And then you can see the other ones there. So we're around 25 risk out of 100 right now. I think I haven't looked at the price today, but we're between 20 and 30 risk, which is really low risk. If you get an opportunity to DCA in, during the green, like we have, I mean, it was pretty short lived when we went to 25. So we haven't had like a big opportunity, but people could have been DCAing in, between 20 and 30 for the last little while. And then of course, we can go lower. We have gone, if you look at the previous 2 bear market bottoms, we got down to 1 in 2015, and we got down below 10. So like maybe 8 risk was the bottom here. That was like a 10 risk. And then COVID, we got down to 1 risk.
Wow.
And it's the same with the tops, right? Like, we can see this was 100 risk during 2017. Right. And then this beginning of last year, we got to like around 90 risk or so. And then my last slide, this is just again zoomed in more so you can see kind of where we're at. Like we actually did go on that wick below. We actually got down to, I think, around 18 risk or something. So it was a pretty good entry for the people that, I mean, in theory, we don't know yet for sure, but in theory, that 25, people that bought there, that was a pretty good entry, I think. But time will play out. I mean, we'll see what happens. So,
well, you've definitely. Go ahead. I'm sorry.
No, go ahead. Sorry. I was wondering if you want to add anything to all these charts.
No, I think they're wonderful. I think it's absolutely remarkable what you've done. And I think that, first of all, everybody needs to go and follow you at The Real Plan C over on Twitter. You have some incredible charts. And I think it's important that we look back on this because historical analysis is the foundation of all technical analysis, and it's the foundation of all on-chain analysis as well. And you've definitely found some remarkable confluences, and I do definitely agree that sub $25,000, but not far below that is going to be the bottom. It lines up with a lot of the technical analysis, and we see that that's probably about where you're going to run out of steam for the bears. I don't foresee Bitcoin going down below $20,000, and a lot of institutions not jumping in and pouring billions of dollars into the cryptocurrency market. You made a lot of fantastic points here, Plan C, and we're definitely going to have you back. There are so many more things that I want to talk to you about how fundamentals impact on-chain, historical analysis. There's so many things I would love to unpack here, but unfortunately we're out of time. Is there anywhere other than Twitter that we can find you, and any final thoughts that you'd like to share?
Yeah, no, that's it. No, thanks for having me on, Jebb. I really appreciate the opportunity to come on and you ask great questions and great conversation. Just on Twitter, just at The Real Plan C on Twitter. That's the main place right now. And then, that's it. That's basically it. Just on there mainly. I do Twitter Spaces sometimes. Actually, I do one with Kelly on Thursdays.
I bet you're on with Kelly, aren't you?
Yeah. Every Thursday I do a Twitter Spaces with Kelly, and that's awesome. Always a really good chat with him. So those are my main 2 things right now. So
good deal,
thanks
guys.
again.
Yeah, absolutely. Well, definitely everybody who is watching this stream, make sure to go and check out The Real Plan C on Twitter. You can see it right here. My friend, it was a pleasure having you on, and we're definitely going to have you back. Take it easy.
Yeah, for sure. Take care. Have a good one.
Have a good one. Bye-bye.
All the best.
God bless you. Yes, absolutely. Guys, here's his Twitter. Make sure to go follow him. Let's see if we can't get him up over 140,000 followers. He's at 139, 231 right now. If everybody who's watching this stream goes and follows him, then I think we can get him to 140 here in the next hour or two. So make sure to go and follow. You are going to definitely be glad that you did. But now we're going to go ahead and jump into a period of reading some super chats, and then we have a discussion about Jack Dorsey, Jay-Z, and how they together are fighting the inflation of the U.S. dollar. Let's do it.
Absolutely. Yeah, not a ton of super chats today, but we did get one from Elliot Locke, member for 6 months now, as a Jebb Padawan. And he said, CPI is higher now and the markets are responding. In ADA's case, will the hard fork counter the negative price action from the CPI, or will it enhance it with a buy the hype, sell the news event?
I think that you're going to see a lot of FUD come into the cryptocurrency space, especially after you see the Federal Reserve raise interest rates on the 15th. They're almost certainly at this point going to be raising the federal funds rate by 0.5 basis point. But T-Shroom, that's actually really your realm of expertise as far as inflation and the raising interest rates. What impact do you think that's going to have on Bitcoin and crypto and Bitcoin and Cardano?
Yeah, I think specifically with Cardano, it's interesting it will be interesting to see. My prediction is that I think Cardano will actually be able to fight through the macro right now, those macro forces that are kind of pushing down on buyers, on bulls. I think that why? I think that the hard fork just transcends that. I think that it's a multi-year anticipated event, and it's something that is just very powerful. Now, will it stay at those high levels? Will the price of Cardano stay at the high levels that it eventually that it can go to in the lead up to 29th? I don't know. That's probably less likely, but I think that we do see a run up during that time. And also, don't ever underestimate the power of markets to just go into an asset because there's hype and as a way to just get a quick gain, and that'll pump it higher. Those folks will obviously sell at the top for profits, but that could potentially pump some volume that could get picked up by bots, by other kind of less experienced or moderately experienced traders that don't sell. So there's a couple of different factors why I think ADA will actually buck the trend of kind of this bearish market that we're in, just for that time period, and it could go higher. I mean, it kind of depends how much more fast how fast the speeds, the hash rates go for Cardano after this fork, and how much more decentralized it can become through this. And if the results are really outstanding and really remarkable, this could send Cardano higher, and it could go ahead and flip. What is it? Binance is the next one up?
Yes, it'd be Binance.
And if Binance continues to get negative outcomes from this SEC investigation that they're in, you could see a flippening for Cardano, which would be really cool. But for the rest of the market, unfortunately, kind of my prediction, and Plan C also, kind of warned on this, is that the macro is really leading the market. But with Elliot Locke's question here specifically on Cardano, I think Cardano may have a chance to buck the trend here.
I think you'd be right. And using the metric that he was just talking about, realized price, if we look over here at Masari.io, you can see that the realized market capitalization of Cardano as of a few weeks ago, that's the most recent data we have, was $28 billion. Its current market capitalization is at $20 billion. Well, not long ago, not even a year ago in September, the price was at $3. The market cap was $100 billion, but realized market cap was $44 billion. So it was massively overvalued. At this point, it's far below that metric, indicating that Cardano is undervalued. And many other cryptocurrencies would fall in a very similar place. So very interesting data. I do think that you're going to see a big bounce on Cardano, and I do think that you're going to see a run up moving with Vasil, despite what you're seeing in the fundamentals. But speaking of the fundamentals, let's go ahead and jump into those. We have an article over here on my screen having to do with Jack Dorsey and Jay-Z being under fire for a Bitcoin education program in Brooklyn public housing complex. And this article makes me a little bit annoyed. I'm a little bit annoyed, I think is the right way to put it, at the way this article was written. So let's go ahead and do this. Let's go ahead and read this, because I think what Jay-Z and Jack Dorsey are doing is a wonderful thing. Jack Dorsey and Jay-Z are facing questions after launching an education program in a Brooklyn public housing complex the billionaires say will help marginalized communities achieve financial independence and sovereignty through cryptocurrencies. The Bitcoin Academy program will be the first to open to residents of Marcy houses, where the rapper and entrepreneur whose real name is Sean Carter grew up, according to its website. First and foremost, I think that is an absolutely wonderful thing. They are trying to go into this community. They're trying to help teach them valuable skill sets that they can go forth and they can make money on and that they can achieve financial sovereignty on. This is a great thing. Why would anybody attack them on this? This is a wonderful thing. I'm going to go give you some skill sets. I'm going to go, using my own money, give you some skill sets and teach you some skill sets so that you can go forth and make some money for yourself. Make something of yourself. I'm going to help you. This is a good thing. This is a great thing. Does everybody in this room agree this is a good thing? T-Shroom, is this a good thing?
I think it's a great thing.
Smay, is this a good thing?
Yes.
Okay, thank you very much. I'm not the only one. In chat, is this a good thing that Jay-Z and Jack Dorsey are doing, at least from what we've seen so far? I think so. Okay, gosh. Dorsey and Jay-Z are funding the program themselves. Wonderful. That's very kind of them. Dorsey, the co-founder of Twitter and CEO of payments company Block, is worth $5 billion. Jay-Z's worth $1.3 billion. Education is where we start. This isn't just about Bitcoin. It's about long-term thinking, local economies, and self-confidence, Dorsey tweeted on Thursday, and I could not agree with that statement more. Here's where I get very annoyed at this article. However, the value of the program has been questioned by some critics. Cryptocurrencies are largely unregulated, and their value is extremely volatile, like the US dollar that you are being paid in to write this article. Not attacking you for being paid to write an article. All got to have a job. But do you think that Bitcoin and cryptocurrencies are volatile, whereas the rest of the global markets are not? Bitcoin is on an uptrend in the last 12 years since it's been created. It's volatile to the upside. Just hold it long enough. Look at the price action chart of Bitcoin if you want to call it volatile. Nobody ever does this. Be fair. Have some integrity with what you're saying. It's up and to the right for 12 years straight. What has the US dollar done? If you look at the US dollar, and I don't have a chart of this pulled up, but if you look at the US dollar compared to today, compared to what it was 12 years ago, it's going to be moving in this direction. Which one would you rather a marginalized community that has financial problems be in? Seriously. The whole lack of education problem is not just something that we need to help different people in need with. We also apparently need to help the person writing this article because they don't understand Bitcoin either. I'm sorry. I'm just annoyed. I'm annoyed.
You're a little heated. You're a little upset, Jebb.
Okay, I'm sorry.
It's okay.
Okay, I'm sorry.
It's okay. I've got a tweet here from the man himself, Mr. Carter, Jay-Z.
Go for it.
If you'll go to my screen, you can see Jay-Z said, shout out to @Jack Dorsey. Hashtag Bitcoin Academy started in Marcy, a place that taught me so much, is hopefully the first of many. The simple goal is to provide people tools to build independence for themselves and then the community around them. So big sovereignty push there. And also,
Wonderful.
if you stay on my screen, I will show you exactly where Marcy is. So this is the United States right there. We all know and love. Zooming into New York. And there we are in Brooklyn. And this is the area in which Jay-Z grew up, presumably. And this is where they're having this new Bitcoin Academy. So really cool, full screen, really cool stuff there.
Here's a great comment. Quick Dolo, I think it would be the way to say that. Yes, Jay-Z is facilitating a crowd who doesn't trust this system to learn about the purpose of crypto. That's big and revolutionary, I would say, and dangerous to the powers that be. Here's another part of this article. If you ask Marcy House's residents how best to meet their needs, how many would say a Bitcoin class? Crypto enthusiast Austin Robbie asked Dorsey in a direct tweet. Well, Austin Robbie, I ask you. Have you gone and asked them? Because Jay-Z grew up there. Jay-Z grew up there. He thinks it'd be a good idea. He might know what to do in that aspect. Here's the thing. We can either give people things or we can give people skills so that they can get those things. Those are the two ways that we can help people. I want to help people. I want people to have financial sovereignty. I want people to adopt Bitcoin because it is good for them. But if I just give them $10,000 in Bitcoin and say, here's a fish, eat it. You'll be satisfied for today. That's wonderful, and we should do that. I am not in any way discrediting going out and doing and directly helping people. That is wonderful, and we should absolutely do that. That being said, what's going to create generational long-term wealth and sustainability is going forth and teaching people skill sets that they are going to be able to use to meet those needs themselves. That's why I like what they're doing here so much. That's why I love that they're basically talking about helping these people achieve financial sovereignty, and they're talking about helping them in a way that helps them to grow and learn themselves so they can go forth and do these things on their own so that they can help achieve financial sovereignty. What the author of this article seems to want to do is for Jack Dorsey and for Jay-Z to keep all of the sovereignty over helping these people with their lives in their hands, rather than educating them and putting it in their hands. Because Jack Dorsey and Jay-Z know how to make money. They know how to create a bunch of wealth with Bitcoin. They already have everything that they need to do that. The people in these communities that are downtrodden, potentially, I don't know the whole situation, but this article is calling them marginalized. If they are in a bad situation, then instead of holding onto the funds and saying, here's an allowance, here's an allowance, here's an allowance, I'll give you whatever you need for right now. How about instead of keeping the sovereignty for Jack and Jay-Z's selves, why don't they do exactly what they're doing right now and give them the financial sovereignty to go and make something for themselves? Because you're right. Jack Dorsey and Jay-Z don't know exactly what they need. You know who does? The people they're trying to teach so that they can go forth and do it themselves. That's why this article is annoying to me, and that's why I love what they're doing. Shout out and props to Jack Dorsey and Jay-Z for trying to help people understand what Bitcoin is all about because Bitcoin is a grassroots movement. It comes down to people having financial sovereignty in their own hands, and at least in this move, Jack Dorsey and Jay-Z seem to understand that that is the case, because if you just give them a fish, then yes, they'll eat for a day, but if you teach them how to use Bitcoin, then they can find financial sovereignty for generations to come. T-Shroom, what are your thoughts on this?
Yeah, I mean, if you give a man a fish, you feed him for a day, you teach him to fish, you feed him for a lifetime. I think that's definitely, that's kind of the core value of what education is. And folks like this article is saying that are marginalized, socioeconomically disadvantaged, they oftentimes don't have, what it takes to go feed themselves fish. So, Bitcoin is really there, and it's going to be able to, come along a lot of other financial literacy aspects as well. How to use credit cards in the best way possible, how to save money just in general. These are things that, I have close friends who weren't taught at a young age, and there's plenty of Americans who just do not understand how personal finance can advantage them. And, they're looking at their credit card bills months after month, and it's not adding up, and they're, going more and more into debt, and it's scary. It's frightening. And so, Jack Dorsey and Jay-Z, they don't have the problems. They don't have everybody's problems solved, right? But they're going and they're trying to help people equip themselves to overcome their personal finance woes. And, this is an excellent move in my opinion, especially as we move into kind of what we heard today from the government of the United States is the inflation is ticking higher.
That's right. So we just found out with an update from CPI numbers that inflation currently sits at 8.6%, up from 8.3%. We actually have a chart to show you this, but it hasn't updated because this data just came out 2 hours and 11 minutes ago. Came out at 8:30 a.m. this morning. You can see right here a press release from CPI, from the Bureau of Labor Statistics that generates the CPI. In May, the Consumer Price Index for all urban consumers rose 1% seasonally adjusted and rose 8.6% over the last 12 months. Not seasonally adjusted. The index for all items less food and energy increased 0.6% in May, up 6% over the year. So here's the problem with that. If you look at energy, it's up 34.6%. If you look at food, it's up 10%. If you look at all items, it's up 8.6%. And then we're over here saying major categories is up 6%, and then we only care about major categories because you're not including food and energy. This is ridiculous. People want to look at this number right here, all items less food and energy, and then they also don't include rent. They also don't include housing payments, and they say, oh, well, those are not consumer products. You want to tell me that a home is not a consumer product? It is the largest consumer product that a person will ever buy in the normal average American life. Same thing with rent. Rent is definitely a consumer product. You are renting a place to live, and it's not included. The CPI is a fudged metric, and it needs to be reworked because it does not give you the right picture of what's going on. Even though it's a broken metric, it is still showing to a certain extent how bad the situation is. We are at 8.6%, up from 8.3%. T-Shroom, we have not seen this kind of runaway inflation since 1981 and Reagan was in office. What do you think we can do about this?
Well, it's tough. I don't know that there's anything that we as individuals can do in terms of like trying to sway the government at this point, because they're really doing all they can with these rate hikes. You could make the argument that they should make the rate hikes higher, up 75 basis points. But what we can do is look into our own personal finances and then see what we can move around, what we can adjust, and what we can importantly spend less right now in this time, as a lot of economists are speculating that we're going to go into a recession as defined by economists. A lot of folks think we're already in a recession, but really taking the time to look into our own personal finances. This is what Jack Dorsey and Jay-Z are trying to do with their Bitcoin Academy, is help folks kind of sift through all of the marketing and all of the crap that marketers try to throw at you to try to make you buy things, make you feel like you're not worthy until you own certain things. They're trying to go in there, and that's exactly what financial literacy does. It helps you look at the bottom line. What are you actually spending? What are you actually earning? And do those match up? Do those make sense? And obviously, then once you've got that cleared up, you can start investing in things like Bitcoin, investing things that you're confident and have strong convictions in. I think with the current president that we have is nothing like Reagan. I think that the current president, from my perspective, really isn't super interested in crafting policy himself. I think that they've kind of outsourced a lot of that to the more extreme, the further left folks in the government. And that's a strategy that they think is going to be successful. But so far, it's nothing like what Reagan was able to do to get America out of the inflation that it was incurring during the 80s.
It's funny because you know what Reagan did to help get us out of the inflation? Shrunk the government. And that's one of the things that Bitcoin is going to help us with, is it's going to take sovereignty away from the government and put it back in our own hands. But what can we do with this information so that we can go forth and explain the currency revolution that we're currently in? That's what we should be doing, first of all, is that we should be going forth and explaining to people we are in a currency revolution like we have never seen before. We have never seen in the history of mankind anything like Bitcoin show up on the face of this planet. Even gold had an inflation rate that would continue forever. Even gold can be inflated. People think, oh, gold's the hedge against inflation. Well, it's not much better. It inflates 2% a year. If you're going for 2% inflation on your currency and you're getting 2% inflation on gold, then what's the point of being in gold? You might as well stay in the US dollar. It's almost like the US dollar would have been backed by it at that time. It's not. Gold is getting inflated too. Bitcoin's not. When people wake up and realize that one of the biggest problems that we have financially in this world is, one, a lack of financial education, as you were just talking about, financial literacy, but two, the inability to store wealth into the long-term distant future, not only because of a lack of education, but also because of a failed monetary system, then people will realize why Bitcoin. So what I encourage you to do, if you're watching this stream right now, is go and tell as many people as you can. Go tell 10 people. Let's put a number on it. Go tell 10 people right now, one, to subscribe to Crypto Jebb, because we are constantly giving you updated information on how to evangelize Bitcoin, what Bitcoin is, why we can invest in it, how we invest in it, all of these things. Tell 10 people to go subscribe to this channel. And then while you're telling them that, tell them the good news of Bitcoin. That, hey, you didn't have a place to store your wealth before. Now you do. You didn't have a system that actually incentivizes long-term investment. Instead, you had a system that incentivized spending. So you've been taught wrong your entire life about how to build financial sovereignty. You've been taught, oh, you get $200 in your paycheck, spend $200 that week. That's not the way to do it. Go and teach people how to actually work in a financially sovereign system, and tell them about Bitcoin. T-Shroom, what are some of the ways that we can do that? What are some of the ways that we can go and help orange pill folks?
Well, now is as good a time as any. Everybody knows who Jay-Z is. A lot of people grew up listening to some of his music. And, lesser people know about Jack Dorsey, but there's still a lot of, he's a pretty famous guy himself, founder of Twitter. So now is a time where orange pilling is cool. This is literally what Jay-Z, who is very, very popular, certainly a prince of hip hop, is doing right now. It's what he's choosing to do with his time and his resources, and it's making waves in the media. So people are going to be hearing Jay-Z, Jack Dorsey associated with Bitcoin, and now is a good chance to start some of those conversations with people who might have otherwise thought you were crazy. You're talking about Bitcoin. Bitcoin isn't that crazy internet money. Now is a time where legitimacy is kind of baked into that conversation, and you can go and have that conversation. Now you have to act relatively quickly, though, because as we know in America, the media cycles so quickly. By the end of the week, we might be talking about some elephant that tried to cross a interstate or something crazy that's going on, and the media will be focused on that.
That'd be pretty cool.
Yeah, which actually
I would watch that news article.
Yeah, that's fun. But but some other things, like I said, really helping people understand, in addition to, Bitcoin and crypto, helping people understand, how to manage a credit card properly, helping people understand, how to make a budget, things like that, helping people understand ultimately and fundamentally that their worth should come from something other than the things that they own, that their worth should come from within. And here at the channel, we would argue that your worth comes from your Lord and Savior Jesus Christ,
Amen.
and God, and it shouldn't come from anything really other than that, and not everybody's going to agree with that, and that's okay. But there's a lot of different things you can do to help people who who are struggling with their finances, and even people who aren't struggling, maybe they're in a position to go ahead and buy some Bitcoin, but be careful. Don't try to encourage people to put a large amount of their money into Bitcoin or really anything. You don't want to invest more than you can afford to lose, right? And also, if you're keeping up with this channel, you're keeping up with crypto, that crypto could continue to go lower as macroeconomic trends continue to be the prevalent force, pushing markets, down to the downside. We're continuing to predict that, on into the fall, markets are probably not going to grow, right? And unfortunately, Bitcoin, it does seem to be coupled with the equity market, specifically the Nasdaq, and those are responding, heavily 1-to-1 with what the Fed is doing, and as the Federal Reserve continues to, issue these rate hikes month after month, these 50 basis point rate hikes, it's just going to push the market lower. So, all that to say, don't encourage people to buy large quantities right now, but DCAing, is kind of the gold standard right now in an approach to Bitcoin. Is definitely help people get their feet wet in Bitcoin. That's an essential part of orange pilling. You may even consider, going that extra mile and even helping them set up a wallet and then sending them some Bitcoin. The transfer rates are very, very cheap for Bitcoin. So, it's something that I have considered doing. But if that's not something you feel comfortable with, I can understand that as well. But, that's kind of what I would say. There's some tools in the toolbox for you, some things to go ahead and go forth in this time again, where Jay-Z is making it cool, making it fun and popular to talk about Bitcoin.
Seize the moment. Jay-Z is getting in the news about Bitcoin right now. I want you to do something. Equip yourself with the why of Bitcoin. What is the why of Bitcoin? It is 2 words: financial sovereignty, putting the control over finances back into the power of the individual or a trustless third party named Bitcoin, which cannot be hacked, corrupted, and has no morals, so it cannot either be good or bad, it just is. That is the root of what Bitcoin was made for and why Bitcoin was created. Equip yourself with that. Understand how to articulate that. Understand that one of the outflowings of that truth is that Bitcoin is inflation hardened. It is inflation hardened. It cannot be inflated. It will be inflated based on its mining, but its mining schedule is tapering off. That's the only way that it'll be inflated, and it cannot be inflated in any other way than that, and that is a de-escalating inflation that will taper off over the next 118 years. So make sure that you understand that. If you want to learn more about that, Club DeFi is a great place to go. When we launch, then make sure to check out clubdefi.com. We'll teach you all about it. As far as action steps for you, you should probably be acting right now. Right now, as we talked about earlier with Plan C, now is a pretty good time to be dollar cost averaging and accumulating. He talked about people accumulating below 30K. Well, guess what? We're below 30K at the time of recording this video. You are in a prime opportunity to be accumulating Bitcoin and cryptocurrencies down at these levels to hold for a multitude of years. Remember the other thing that Plan C was talking about. The longer that people hold, the more money that they tend to make on the average. So if you're buying Bitcoin right now, then hold it for a long time. Use your own research. I'm not your financial advisor, but don't worry about whether or not it's going to be in profit tomorrow. Worry about whether or not it's going to be in profit in 5 years. Go back 5 years from any point in the chart and you're up. Any point in the chart. I challenge you. Find a place on Bitcoin's chart where you can go back 5 years and within 5 years you were not in profit. As far as I'm aware, unless something's changed in the last 6 months since I've looked at that statistic, and it shouldn't have, then you have been in profit every single time if you held for 5 years. And you probably outperformed every single other major asset class in the world. Bonds, commodities, equities, real estate, precious metals, Forex, all of that. You outperformed everything if you held for 5 years, and that trend is likely to hold up. Seize this moment where Bitcoin is in the media and orange pill some of your neighbors. But we're now going to go into a period of super chats, and we also have to talk about the HODL Trophy, because today is Friday.
Yeah, absolutely. Well, we're not seeing a ton of super chats, and that's just the long and short of it. So there was one that I thought was kind of interesting earlier, much earlier, when Plan C was on, and Ryan Kessler said, a bear market causes people to really zoom out to the larger time frames.
That's absolutely right.
Yeah.
Yeah, I saw that. That's a very good comment. You're right. And it's those people that zoom out to the larger term time frames that become the bedrock that underpin the rally of the market into the future.
Yeah. Yeah, and that's exactly what you were saying. You got to zoom out. I actually never heard that statistics about holding for 5 years you would never be down. In my mind, that's true. If you were holding 5 years ago today, you'd absolutely be up.
Yeah,
that's for sure. That's
even
really,
at the bottom, at $3,000 at the at the bottom of the pandemic drop, you'd still been up 5 years if you bought 5 years earlier. I think it's actually 3 years. Any point in might be 4 years. Any point going back 4 years at any point in the history of Bitcoin, I think you'd still be up.
Yeah,
might be
somewhere
like
in there.
4 to 4.5, but 5 is definitely the case.
Somewhere in there, definitely. Well, Jebb, I want to ask you this question: how do you think that this inflation data that we just got? Do you think that that's going to affect the Fed decision on the 15th?
I think the Fed's already made their decision, to be honest with you. I think they're kind of coming into the room saying, okay, we all plan on doing this. Any objections? Okay, great, we're going to do it. I think that's the way that meeting's going to go. It's going to be pretty simple. It's going to be pretty cut and dry as far as I can tell. It's going to be a moment of, yeah, okay, all the more reason to raise it 50 basis points. As far as raising it to 75, I don't know if they're going to do that. I don't think they're going to get more aggressive than that. As you talked about, T-Shroom, when they are raising interest rates, they typically they go in a linear motion. You can go back on the chart going back to the 30s, and whenever they're raising the federal funds rate, they typically do it at the exact same rate. And if they make a change, then typically it's that they skip an interest rate hike. It's not that they double it. Mm-hmm. So I don't think that that's going to be the case because they're scared to shake the market too much because they know that the economy is already very fragile right now. Good question. What do you think on that?
Yeah, I actually 100% agree. For folks who haven't been tuning in or haven't tuned in while we've been covering this specific question, the Fed is more than likely going to be doing 50 basis points, just through the end of not through end of the year, but through September. And they may change that up in the fall, but for now they're on. They've set their course. And they're just like the Titanic. They don't like to make a bunch of turns. They like to set the course and stay that course for as
well. They don't want to be like the Titanic was destroyed because it did change course.
Yeah, an excellent metaphor from T-Shroom.
Yeah, absolutely.
But
And Moses said, "I am the most humble man that ever lived."
That's right. Yeah, humility is very, very important. Very important.
That's right.
Yeah. So Jebb, do you think that you'll be orange pilling anybody with this new kind of big Jay-Z wave behind you?
Well, we got 1,100 people that we just attempted to orange pill. We'll see if some of them take the pill, and hopefully the ones that did will smash that like button. Let's see if we can't get to 600 likes before the stream is over. Let's go ahead and go over our price predictions. Does Tim have that data? I hope he doesn't. Smay, do you have that?
I think he did, and that's why I was a little bit like,
because
I went and checked Tuesday's document to see if I could find it, and it is in the ether. So if anyone wants to let us know in the chat what our predictions were,
if anybody wants to let us know who won,
that's just what happens.
Didn't somebody predict 29.5?
Tim's the glue, he's.
I think
I predicted.
Might have been Tim that won. I don't know. We might have to figure it out from Monday's stream.
Maybe. Yeah. Well,
we'll tweet about it.
Tweet it out.
I will say that I'm pretty sure I won. What's Bitcoin at right now?
29,570.
I think I won. I think I said 29.5.
I think so too. I think Sway took it.
Sway.
I think Sway.
Golly,
I think I'm swayed
Sway got it.
to believe that Smay got it.
I do think I won, but let us know in the chat if I won because Tim decided to take that with him. So,
well, guys,
shout out to Tim.
One final word before we wrap it out. If you guys are trying to make waves in the cryptocurrency space, then you got to plan for a massive tax liability, and the Lorenzo tax wants to help make sure that you are prepared. Join us on June 17th for this webinar where Lorenzo will break down 8 strategies to help you save money and keep more of those gains. He's going to walk you through the tech that he uses to manage his client's account. I am one of his clients, and help you assess whether or not you can DIY your books and when it's time to bring in a professional cryptocurrency tax person like him. Again, don't miss out the webinar. If you do want to avoid a hefty tax bill at the end of the year, it's on June 17th. The ticket is $100, and you can register at my website, cryptojebb.com/webinars. Make sure that you check that out because $100 to save you, I don't know, $5,000 in taxes sounds like it's pretty worthwhile.
Oh, I won.
You won.
People are saying in the chat, I predicted 29.5.
I was going to say, I thought somebody predicted 29.5.
So I am the victorious victor, and that was also like stinking almost on the dot.
Yeah,
so,
that's right.
So everybody, I dedicate this to the Celtics. Hopefully, I see them hoisting up a different kind of trophy in a couple days.
How great would it be if the Celtics hoisted up the Huddle Trophy?
Well, that would be great, but I want to see them hoist up the Larry O'Brien Trophy.
The Heisman Trophy.
Yeah.
The
So
the FIFA World Cup.
So you know, I'm excited about it. Oh, what? Somebody said
Philly fan says it was Jebb. He guessed 29.5. I know somebody did.
No, I did.
I don't remember who did. We'll have to go back and fact check this because we have some disagreement in the chat. But
everyone's saying
it looks
Smay.
like Smay has won.
We'll tweet
so
out.
Congratulations.
Well, either
to
way,
Smay.
we're not going to go back and check. I won.
Okay. Well, whatever.
I
Anyway,
won.
here's your takeaway, guys. The cultural king of American hip hop, Jay-Z, is orange pilling New York as inflation is leaping higher, and so can you. Make sure that you take advantage of this moment because inflation being this high is something that happens once every 20 years or 30 years. And it will more than likely get under control in the next 2 to 3 years. Hopefully. I don't think we're going to spin off into hyperinflation. It's possible, but it's unlikely. Right, right now, you have massive names coming out and preaching Bitcoin, and you also have the problem on full display, i.e. inflation. It's so much easier to tell somebody and explain to somebody and convince somebody why they need a doctor when they've got a giant gaping wound. Well, right now, because of inflation, because of $5 a gallon gas, which we just hit the national average at $5 yesterday for America, there's a giant wound. And there's one system that can solve it, and it is Bitcoin. So make sure to go and spread that to as many people as possible and explain to them, yes, Bitcoin can go down 60% sometimes. But over the last 10 years, it's up 600,000%. Because it is the better system, and it will continue to rally. Not at that exponential rate, but it will continue to move to the upside in a big way. Make sure to share as much as you can about Bitcoin while we're low so that those people will come back to you in 5 years and say, man, I am up. I have made money, and I thank you. And my life is now better because I got into Bitcoin. Make sure to go and do some good in the world this weekend, guys. Thank you so very much for watching. If you did enjoy, make sure to hit that like button, subscribe to the channel. Make sure to follow Plan C on Twitter over at The Real Plan C. Make sure to follow me on Twitter over at Crypto Jebb. We're also on Instagram under that handle and at Crypto Jebb Official over on TikTok. The Coin Father just donated, said, hey, remember, if money talks, then Bitcoin sings. That is a great way to wrap out the week. That's absolutely true. Thank you for that. Guys, that's all we got for you today. Before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.
Oh, I got a real good feeling.